The year is 1922, Berlin. A woman walks into a bakery with a wheelbarrow full of cash. By the time she reaches the counter, the price of bread has doubled. She leaves the wheelbarrow outside for just a moment, and when she returns, the money is dumped in the gutter, but the wheelbarrow is gone. Because in Weimar Germany, the wheelbarrow was worth more than 1,000,000 marks. Now fast forward to today, the United States has printed more money in the last 15 years than in the previous 200 combined. The national debt crosses $35 trillion. Inflation quietly devours purchasing power, while wages stay frozen. And if you know history, if you've studied the rise and fall of empires, you've seen this movie before, because what's happening right now isn't new. It's stage 5 of a 50-year cycle that has destroyed every major empire in recorded history, and America is following the script line by line. Before we go further, if you want to understand where the world is heading and why the next decade will look nothing like the last, hit that like button and subscribe, because this channel breaks down the patterns the mainstream won't touch, the historical cycles that reveal what's coming next, and we're just getting started. So what exactly is a debt supercycle? Think of it like this. A country borrows money to build infrastructure, fight wars, stimulate growth. In the beginning, that debt is productive. It builds roads, factories, schools. It generates more wealth than it costs. But over time, the debt grows faster than the economy. Borrowing becomes a habit. Then it becomes a necessity. Then it becomes the only way to keep the lights on. The cycle lasts about 40 to 60 years, which is roughly the length of a human career, just long enough for one generation to forget the mistakes of the last. And here's the kicker. Every cycle ends the same way. First, currency stress, then inflation, then loss of trust, and finally, restructuring. Sometimes it's peaceful. Usually it's not. But it always happens. Rome, Spain, France, Britain, the Ottoman Empire, the Soviet Union. All of them rode the same wave, and all of them crashed on the same rocks. Let's start at stage 1, the rise. This is when debt is still healthy. This is Rome in the early Republic, borrowing to build aqueducts and roads that would serve the empire for centuries. This is the Ming Dynasty in China, investing in the Forbidden City and the Great Wall. This is Britain during the Industrial Revolution, financing railways and factories that genuinely created wealth. And this is the United States after World War II. The Marshall Plan, the interstate highway system, the GI Bill. Barring that led to the greatest economic expansion in human history. During stage 1, the currency is strong. The government borrows responsibly. Economic output is real. The middle class grows. People trust the system because the system works. But here's the thing. Success breeds confidence, and confidence breeds risk. Stage 2 is prosperity, but it's prosperity with a shadow. This is when debt stops being a tool and starts being a drug. Rome begins minting coins with less and less silver. The Ottoman Empire borrows heavily from European banks to fund palaces and wars. France, before the Revolution, is drowning in debt from funding the American Revolution and the lavish court at Versailles. And in modern America, this is the 1980s through the late 1990s, credit cards become ubiquitous. Home equity lines flood the market. Debt is repackaged, securitized, sold as innovation. Alan Greenspan calls it the Great Moderation. But beneath the surface, the economy is shifting. Borrowing is no longer just for investment. It's for consumption, for lifestyle, for keeping up appearances. The warning signs are there, flashing quietly in the background. Savings rates drop, trade deficits widen, asset bubbles start forming. But no one wants to hear it because everything still feels fine. Stage 3 is overconfidence. The empire believes it cannot fail. This is Spain in the 16th century, flooded with gold and silver from the New World, convinced that wealth will flow forever. This is Britain before World War I, ruling a quarter of the globe, certain that the sun will never set on the empire. And this is America in the early 2000s. The dot-com bubble bursts. But instead of learning the lesson, the Federal Reserve slashes interest rates and floods the system with cheap money. Housing prices skyrocket. Wall Street creates exotic financial instruments that no one fully understands. Subprime mortgages are sold as safe investments. Lehman Brothers is leveraged 30-1, and everyone from bankers to baristas believes that real estate only goes up. The assumption baked into every decision is that growth is permanent, that the system is too big, too smart, too advanced to fail. But history has a different lesson. Overconfidence is the moment right before the fall. Then comes 2008. The global financial system nearly collapses. Lehman Brothers goes under. Bear Stearns is gone. AIG is bailed out. And instead of letting the system reset, instead of allowing the pain that might have led to structural reform, governments around the world do something unprecedented. They print and print and print. Welcome to Stage 4, Financial Engineering. Printing to solve printing. In revolutionary France, the government issues a new currency called the assignat, backed by confiscated church lands. It works at first. Then they print more and more. Within 7 years, the assignat is worthless. In Weimar Germany, the government prints to pay war reparations, to fund unemployment benefits, to keep the economy afloat. Prices double every few days. Savings are obliterated. The middle class is destroyed. In Ming China, paper money becomes so debased that people stop accepting it altogether and return to silver. And in the modern era, this is quantitative easing. 0% interest rates. Trillion-dollar stimulus packages. The Federal Reserve's balance sheet explodes from under $1 trillion to nearly $9 trillion. The European Central Bank, the Bank of Japan, they all follow the same playbook. Print money, buy bonds, suppress interest rates, pray it holds. And for a while, it does. Stock markets rally. Real estate bounces back. Unemployment drops. But the wealth isn't evenly distributed. It flows to asset holders. To those who own stocks, real estate, businesses. The bottom 50% see almost nothing. And beneath the surface, the currency is quietly being debased. More dollars chasing the same amount of goods. The money supply grows faster than the economy. It's Stage 4, and the clock is ticking. Stage 5 is where the pain becomes visible. The breaking point. Inflation outpaces wages. In Rome, the silver content of the denarius drops from pure silver to less than 2% over 3 centuries. Prices explode. Soldiers refuse to fight unless paid in gold. The empire starts crumbling from within. In the Ottoman Empire, the price revolution of the 16th and 17th centuries sees the cost of basic goods triple and quadruple. The government can't pay its soldiers. Rebellions break out. In Britain, after World War II, the country is buried in debt. Rationing continues for nearly a decade. The pound loses 3/4 of its value. The empire dissolves piece by piece. And in America, right now, we're watching it unfold in real time. Rent is up 40% from 5 years ago. Groceries cost 30% more. Gas, insurance, childcare, healthcare, all climbing faster than paychecks. The government reports inflation at 3 or 4%, but anyone who buys groceries knows the real number is higher. Wages are rising, but they're not keeping up. The middle class is being squeezed. Credit card debt hits record highs. Personal savings rates plummet, and people start asking a question they haven't asked in generations. Is the system broken? Stage 6 is the confidence crisis. People move to hard assets. Because once inflation becomes undeniable, once people realize their money is losing value faster than they can earn it, behavior changes. In Weimar Germany, citizens rush to trademarks for anything tangible. Food, furniture, gold, foreign currency, anything that holds value better than paper. In revolutionary France, elites flee the country with gold and jewels, knowing the assignat is doomed. In the Soviet Union, in the years before collapse, people hoard dollars, German marks, anything but rubles. And today, we're seeing the early signs. Global gold demand is surging. Central banks, especially in China, Russia, India, are buying gold at the fastest pace in decades. Bitcoin and cryptocurrencies, despite volatility, are being framed as hedges against fiat debasement. Real estate, even at high prices, is seen as a store of value. Because when people stop trusting paper, they move to things that can't be printed. This is the moment when the psychological foundation of the currency begins to crack. And once trust is gone, it's nearly impossible to get back. Stage 7 is the reset. Every empire restructures. In 1931, Britain abandons the gold standard. The pound, once the world's reserve currency, loses that status forever. In 1991, the Soviet Union collapses. The ruble becomes worthless overnight. Savings vanish, pensions disappear. An entire economic system is erased. Argentina has defaulted on its debt 9 times in its history. 9 separate currency crises. France, before the modern euro, went through 7 different currency systems, each one collapsing under its own weight. Spain, the Ottoman Empire, Imperial China. All experienced monetary resets that wiped out wealth, reshuffled power, and changed the trajectory of entire civilizations. And here's what history teaches us. These resets are painful, but they are also inevitable. No empire escapes the cycle. The only question is what form the reset takes. Is it a slow, managed decline like Britain after World War II? Is it hyperinflation and chaos like Weimar? Is it a sudden default and restructuring like the Soviet collapse? Or is it something new entirely, a shift to a multipolar currency system, a basket of digital and commodity-backed currencies, a world where the dollar is no longer king? Right now, the signs are everywhere. The BRICS nations, Brazil, Russia, India, China, South Africa, are exploring alternatives to the dollar for trade. China and Saudi Arabia are discussing oil deals settled in yuan. The International Monetary Fund is talking about special drawing rights as a global reserve mechanism. De-dollarization is no longer a fringe theory. It's policy. And while the dollar still dominates, its share of global reserves has quietly dropped from 70% to decades ago to under 60% today. It's not collapsing. It's eroding, slowly, steadily, exactly the way the British pound did a century ago. So where does that leave us? If history is any guide, America is somewhere between stage 5 and stage 6. Inflation is here. Confidence is shaken. The wealth gap is widening. The middle class is struggling. And the government's only tool left is the printing press. Some say the system can be reformed, that technology, productivity, innovation will pull us through. Maybe, but Rome had engineering marvels. Britain had the Industrial Revolution. The Soviet Union had nuclear weapons. And none of it stopped the cycle. Because the cycle isn't about technology. It's about human behavior. It's about the temptation to print, to borrow, to delay pain, to believe that this time is different. And it never is. Here's the truth. Empires don't fall overnight. They fall in stages. First slowly, then quickly. The Roman Empire took centuries to collapse, but the final unraveling happened in just a few decades. The British Empire held on through 2 world wars, but lost its status in less than a generation. The Soviet Union looked invincible in 1985 and was gone by 1991. And when the money begins to break, when people stop believing in the currency, history doesn't just move, it accelerates. Resets are messy. They redistribute wealth on a massive scale. Those who see it coming, who position themselves in real assets, who understand the cycle, they survive. Sometimes they thrive. But those who trust the system blindly, who believe the promises, who hold paper as the ship goes down, they lose everything. This isn't about doom. It's about understanding. Because if you know the script, if you recognize the stages, you can make decisions today that protect you tomorrow. The 50-year debt supercycle isn't a theory, it's a pattern, and America is following it, step by step, exactly as every empire before it has. The question isn't if the reset is coming. The question is, what will you do when it does?